Okay, we ain't gonna keep having free conversation without getting details mapped out. Welcome, people. Sauce Factory. You already know what time it is. Yeah. Let's get it. All right, so we was talking about these setups last night. Now, and that's the whole thing, right, about managing these trades, because I knew we had that 1,000 ticks on the board, right? The whole thing is about getting there, right? Those 1,400 from the break of this level. So just getting there, looking for those 3-day setups. Because remember, I've been waiting. Like y'all already know, I wait for the 3-day setup. I like to trade on Wednesdays, my initial first trading day. Let the market set its range. Then wait for it to do what it do. And boom, as you seen, this is one smooth ride. So if you would have caught this break, you would have been like heaven. But the thing about it is managing the break, right? So let's go back to the 1 hour chart, and I'm gonna, show y'all what I was looking at all last night in the Asian market. What was on the trading floor last night? Okay. Do. So first thing first, I like to let the range set itself on Mondays. I just let this the opening range. I marked it out because it already took the weekly low, and then we also got the monthly low. I know it's a lot of little levels here, so they kind of get a little lost in the sauce, right? Get that out of there. Get this out of there real quick. So once price set the Monday range, last night here we had our Tuesday range. So it's our Tuesday low. This is our Tuesday high. We slightly took out the Monday high, so we made a range expansion on Tuesday, barely, right? Barely made that range expansion. Boom, boom. So by that Tuesday night Asian market, we kind of came back down. We had came back into this order block right here. It was a bullish order block that was bouncing out of. I think we drop down to a lower time frame and see that a little bit better. Okay, there we go. Yes, yeah, it's a little bit down here. Let's go to a 3-minute chart. I want to at least show y'all this OB. Okay. All right, there we go. See, 3 candlestick continuation pattern. I always say one of my favorites. So you got the bullish candle, indecisive candle, followed by another bullish engulfing candle, right? It can be vice versa. So you can have bearish engulfing or bear candle, indecisive candle, then followed by another bear candle. And on the downside to form this order block. But this is a legit order block, right? So how we know it was later that night when price came down into it in the Asian Open, right? Price start reacting. So once we start getting our reaction from this, now we gotta look at like, all right, what price gonna do? The market been having 2 red days. We need to have a green day or at least a possible pump in one of these markets. So no, we at a low, understanding that all my oscillators saying, hey, they want to come up and reset or at least see the other side of the fence. Right. Let's back up to a higher time frame because we want all these unnecessary candles. Come on, trading view. Why you keep doing me like that? Okay, smooth. And an order block is only an order block after they get tested. Okay, so technically, if we want to say this is a rejection block, we can try to draw that up some more. But technically, we went down to a lower time frame, found what we need to find. We seen what we seen. It's all good. One indication saying we had a rise going on because we had a market structure shift. Okay, and then I'm gonna blow that up. That way everybody else can see this later on. Oh, oh. Okay, cool. So once we had price react, come back down, touch, did not revisit the low, then we know we on the go. Also, the MACD was letting us know what time it was. Boom, it was heading to the upside. The RSI also was heading to the upside. Momentum was shifting upwards. So from there, we had a lot of imbalanced price here, right? Let's hide these oscillators real quick. So one of my initial targets, I was looking for a reaction that was right here, this fair value gap. I was looking for price to react in this zone here and go ahead and push down. All right. But then to really get a nice low, which it did right here at the London market, we had a push reaction to the fair value gap, but then price recovered and pushed up a little higher, right? Now you gotta ask yourself, where did price go? After they took all this market liquidity, took out Monday highs, Tuesday highs, then we back up here Friday close for a new high a day on Wednesday. Okay, so we're gonna mark this out because I gotta do this anyway. This is my trading chart here. I normally make a new one, but hey, we had all this data, had to put it. So once we made a new Wednesday high, guess what? Because my prediction was we got into this gap, react to the gap, and then we shoot down back down here to this OB. That was my target. That was the plan. Was once we got in the gap, wait for the reversal, then take it back down here for the 1200 ticks, which would have been one heck of a play. You can go ahead and just pack it up for the week after getting a 1200 tick move like this. You feel me? It. But the NQ had other plans. All right. It had other plans and other agendas. It wanted more. So what they did was they kept going, boom, ran the highs, dropped down, came back up to retest. So we had a double top pattern that got put in and let that play out. But this was our signal to say, hey, they ready to actually drop the market because we knew that the market is currently in a bearish situation. No matter what they say about they trying to pick it up or it was just a buy the dip moment, which I don't believe. You need a green day so you can sell. So you have to convince other people to get out of their bear position to get into long positions. Once they create that market liquidity, then they can take the market in a real move. So I've been waiting on a green day in the market so I can sell it down for a while now because I wasn't entering in on no red day because I know they're going to push it up. And when they push it up, it's going to be a reset. We have a range, and you just simply play your range. All right. Because this was the pump and dump setup. So, did you notice from the Asian market to the New York, we had this nice little uptrend going. Okay. This was your pump. Boom. This was the pump. Okay. Bing, bing, bing. Now, like I always tell y'all when we're using the fibs, the market and the light fell out of it. Get rid of this other one. All right. So what I'm telling you, every time we use fibs, look at your standard retracements, right? Notice this is about a 50, 61% retracement. Then you got here, this is like a 23% retracement. This was a retracement nonetheless, but it really wasn't much of nothing, right? And then you're running from here to here. Now you have your shift in structure. You have your market structure shift right here. All right. Because what happened was they came back, tried to retest the highs, fell short at resistance, and then broke down. Once you had these three bear candles in a row, boom, had a nice little OB got set in. You could have took your entry down over here. Whoop. I know a lot of people sometimes I like to wait for the block to come back, but in some cases it's no comeback trade here. This is one of those once you in, you go ahead, kick your feet up and relax. You feel me? Kick your feet up and relax. But yeah, I'll show you real quick with the fibs because I know we got that fib game going on. So from here to here, I really should hide those other drawings. It's getting a little messy. All right, so you see what I mean? Well, I'm cold as hell. So 50% retracement. Boom, price went off. Okay. Now we're gonna draw our next pivot. So look at it from this pivot point to here. Man, what I'm talking about? 23% retracement. Okay, great. Now, when you get to this point, on there. So this is our low. Boop, boop, boop. Then you get a nice little pivot right there. Let's go to this other chart real quick and I'll show y'all because this one's clean. Let's do some little doodling before we got started. 12 minute. Let's go back to the high. This one I normally use clean charts, so easy to keep the examples down low. Okay. So when we got to the high day, and you seen price made a steep retracement, then a quick recovery, but it refused to retest the 559.50 level, and then you seen price starting to give up. Once you seen this come in here, now from there you also have another chart pattern here. Slide this out. So you got your dark cloud covering, right? Bing. Yeah, I remember we seen this one on Apple, right? Before that nice little drop came in, seen cheese sliding off of it. Yeah. So anytime you have a candle open up above the previous candle close, go up and then retrace back about a cool 50%, give or take, that's a reversal. Yeah. And as you see, that was the case here. Now, one way you wanted to get into this was look for your breaker structure. Boom. And that was your no look back trade right there. You would some people, the breakout traders would finally got on one today if they would have been patient. Mm-hmm. You could have had your little limit order set there, but get down on your micros because this stop loss would have been monstrous on this one. I ain't gonna lie to you, she, what I'm talking about. So you would have been like, all right, top of the candle. That's still that's kind of stiff for my blood. You feel me? You feel me? I need a pullback on something. I need a pullback. That's all I'm saying. Ugh. I can't do that one. That stop loss too rich for my blood. I don't know. That's called hypertension stop loss. Yeah. So let's see if we can go down to a lower time frame and figure out what would have been a reasonable stop loss on this, because we got to review these things, right, people? Okay. So we had an internal. So now the structure look a little bit better. Okay. A little bit better. So once we had these failure swings and you see clear as day, market is shifting, right? Boom. We had 3 candle rise and then we drop. So this is one setup we could have entered here. This one entry. Right there, the 3 candlestick order block continuation. Remember, I was talking about that. So you could have went high there. Entry was the break of this candle, because you already know you shifting downwards, right? So you want to wait for confirmation. I will enter on a candle like this in a nice run. Now it's still, pretty stiff to stop loss. It's a 3-minute chart, so you're looking at 160. But at the same time, you was at 500 ticks by the time we got to the low. That was that smooth right there. And then you was at 300 right there. And this is in 12 minutes, give or take. So you would have entered here to here, you had 347. So the risk to reward is there. The risk to reward is really there. It's about how would you manage this. So you was in this move here, you really ate today, especially with leverage and multiple contracts. I know, shout out to Everett. I was watching him on the ES. He was working it. But yeah, you just had to be there to really play that down, right? But this is part of the 3-day setups here. Looking at the higher time frames, letting the market break down, let it shift where it needs to go, set the weekly range, and then from there we can go ahead and play that. Because 9 out of 10, We go back to the other chart here, right? Let's clean this up. Get all this hoopla out of here. This gonna be a high of the week. Okay. So Wednesday is you should get your high of the week. It's only 2 more trading days left in the market. And now we head into our low of the week because now we just took our Tuesday low. We still heading towards Monday low. Okay. So these are things that we look for. And from there, we can easily decide where are you going? Where? We got a fair value gap right here. Boom. Fair value gap template. FEJ. Oh, we there. Cool. What I say? All right, man, I don't make this stuff up. It makes itself up. All right. I'm just here to show it to you. All right, then we got a volume imbalance down here too as well. All this little good stuff. So price can continue down. We are in a bear market. So well, we shifting bearish anyway. You're looking at cycle. Or we got double bottoms, so price can also revisit these lows as well. You know what I'm saying? Y'all get what I'm saying? So I'm gonna be looking for price to definitely come down in here. I want to see some type of reaction, but I don't know if they're gonna give it to us or not. Let's investigate. So we got a small displacement of price with this FEG right here, but not a whole bunch. We got a lot of displacement here, which has been balanced out correctly. So I know this is a target, but will we get that reaction that we need to drive the NASDAQ back into a range? Not sure yet. We had a small reaction, but nothing severe anyway, because we also had this little OB right here on the Tuesday low. Boop, boop. So we had OB, we got a fair value gap, and we got another little consolidation. So I would like for them to kind of come back up here, retest either this or this. These are targets. So I'm gonna say this zone here. I like for them to come back up and retest the zone. That will make sense in a case, right? If they come back, retest the fair value gap, and get this block out of here. It's done now. Whoop. So our displacement happened on the fair value gap, and then we got the order block too. So I want to see if they'll blow through that, get into the gap, at least 50, 60% of this, and then go down. If not, let's see if they take this internal liquidity right here. So you still have a lot of price action, like another little block right there on the table. There's all these little different scenarios that's in the way that can happen. So we'll keep an eye on this. All right, now let's slide over to this gold. Gold, oh, gold. Goldie. Goldilocks. Linda. Good old Linda. There's another one we were looking at last night. Mm-hmm. Yeah. So, same thing. I was talking to my good buddy Rod there. You know, this is one of his favorites. This is our Monday range. Monday high is at 2,500. Then we came down to the low, 24. From there, Tuesday was an inside bar candle, right? So I'm like, okay, we got an inside bar. We had this nice rejection block here, right? We had this nice little rejection block. Boom. Then we had price came down, retested the block. Okay. After they retested the block, we got the break of structure. Market start shifting down into this fair value gap on the lower time frame. So that's the 1 hour chart. So my thesis was after we tested this, we put in our Tuesday low, and we were sitting here trading at this hour, right? Looking at the market, doing a couple paper trades because we don't trade all day. We ain't dope fiends, people. We got lives, but we was planning because I know for sure I had to plan out my week. So I was like, hey, stop loss should be at structure, but I was like, I was being cheap. I went with that little 14 tick stop loss. They wore me out. They say, beep, beep, give me that money. They ran up to my order. This morning I said it's there. I thought I woke up a champion, but I woke up a loser. Okay, but it is what it is. See, we had this little 12-minute fair value gap right there, right there. Mm-hmm. Because I already knew they got this one because of this block here, right? So we had another uh, little rejection block right there. They already tested this once. That's what drove them down. Then they was fighting inside of it here, but they was kind of getting past that. So I'm like, all right, they're gonna go higher and they're gonna get this, in which they did. So once they got that, I left it on the table though, because you got an if then what situation. So you always want to leave it on the table. If they can get past it or get deep inside of it, 9-10, they're gonna claim the next imbalance, in which they did. So from there, we had that was part of our setups. So the good brother, he was patiently waiting. He was there. I don't know if he got all of it. Yeah. I don't know if he got all of it, but yeah, that was up on the board. 215 ticks off of gold because you stop loss top of the fair value gap candle. Not bad. 50 ticks for a stop loss on gold with for 212. That's very much worth it. You feel me? That's very much worth it. Then once you get your pivot in there, then you go ahead and lower your risk down to a 20-piece McNugget. Okay. With 20, that's about $200 you risking right there. That ain't nothing. Compared to what you was getting. Come on now. Come on now. That 100 ticks, that's that's a nice nice right there. I ain't gonna put your business out there like that. But the math, you know the math, okay? So yeah, there you go. That was that play. Gold still shifting downwards because they had to rebalance that. We haven't got any new highs or lows, so we're technically gold is still correlating, which I want to see some type of reaction because they did not do a range expansion yet. We haven't got a new high or low of this week. We Monday set the tone. Wednesday, still another inside day so far. We're gonna see how this Asian London market react, but I'm assuming we're gonna close on the inside. We close to the Tuesday low, so we probably take the Tuesday low and start heading towards the Monday, or we take the Tuesday low and we can get back into this other Tuesday high order block, or get back up in this rejection block here. Mm-hmm. I don't like drawing the blocks too big because then it'd be like, oh, you highlighting the whole chart, my boy. Yeah, so I'm looking for something to happen. Anytime gold is quarterly like this, it's like something gotta happen, right? The economy, US dollar got weak, causing yen go up, but that was in case of they fundamentals, right? They had to do something about their rate because their rates been dropping. Then once they jack their rates up this slightly and start charging interest on the money, put a lot of people in margin call because they've been borrowing money in the yen and taking it to the US banks or other banks to, reinvest it for a profit because pretty much been free for them, right? That that practice came and healed them up. But I'm looking for some type of reaction here. So we got another potential double bottom setting up, but will that give us the results we need? Let's look at it. Let's say this is our bottom. So this is support. Boom, this is our lowest form. And that Wednesday is our high. So we measure this out. All right, that's 270 ticks. Clone that. Whoop. Put at the breakout of Wednesday high because it's not a pattern until it breaks out. So don't be up here false claiming. So it's a potential double bottom. If it breaks out, then yes, that'll be enough ticks to get us into the next OB, which will pull us deeper into the Monday range. So let's see how Thursday set up. So bada boom. That is Linda. Thank you, Glenda. Wonderful, wonderful trading day. All right, you have a good one. Okay, let's get on this CL. Get on that Clarice. Clarice. Okay. All right, so this is what we was talking about last night in Asian session. This is one of my favorites, Clarice Nah, she got very good casseroles. She serve every Wednesday. They fresh, a nice little spice kick to them, but they nice, okay? So I was looking for them to take one of the lows, get some market liquidity, and then retrace back into this higher time frame FEG. That you know. But what we got was a nice 60% retracement. Got a nice rejection block set up. Then boom, we right back in here at 61% retracement, and we starting to consolidate. I drew this last night because this is what I was predicting. They swept the low, come back up here, hit, and then finish itself off. Right? But they didn't do that. They say, buddy, come on, Moss, act up. Act right. All right. So they definitely did the bounce. They ran highs first. So here's our pump. Now we need a nice dump. So either they're gonna dump sometime tonight and then give me what I'm looking for. A nice little run. Boop boop. If they go to the let's say they go to the negative 27 fib, that'll be 218. But I believe they should revisit the Tuesday low or even the Monday low. But for crude oil, unless it's like some crazy stuff jumping off, a Tuesday low sweep would be nice. That's a 3 point move. So about 318 ticks on crude oil. That is very lovely. Very lovely day. If they do such a wonderful thing like that. That's all I'm saying. Uh, we got any questions, good people? Any questions at all? I'm not told you like we told you. We getting in and out. We ain't gonna hold you here all day. Nope. Y'all smooth.
Well, Neil, I have a question. Just
Yeah.
you
What you got?
said that you only trade on Wednesdays. Does that mean that you watch your setup from Sunday all the way up until Wednesday? And if there's that move that you're looking for, that's when you pull the trigger and then you let it ride for the rest of the week?
So typically it should do it in one day because on futures it's day trading, right? So either a scalp or day trade. But I'm looking for this move to happen all in one trading day. And then by Thursday, I'm looking for the market to reset up and probably give me maybe a Friday trade. If not, then I'm done on Wednesday.
Is there a reason why you chose Wednesday outside of Friday and Monday?
Oh, yeah, because this is the opening. So pretty much the market do this, right? It's a 3 day setup. It goes Monday's your opening range, right, for the week. Tuesday's the range expansion. Then Wednesday, either you're gonna get a continuation or a reversal. That makes sense.
It does. Thank you.
So you look at it, and that's what I pretty much was showing here. I'm gonna go to this clean chart and then I'm marking up for you. We will do it. Remove drawings. All right. And then we're gonna go to the hour chart and I'm gonna show you how I pretty much mark this up. This is what I'll be doing on, Sunday nights. So Sunday nights is me looking at the opening range, checking everybody, cleaning up the charts, and then I'm waiting. Right. So let's find this Friday. Okay, Monday. So this was Monday high. Okay. Then you got your Monday low, right? So you can also have Monday trades if you look at it. So from Thursday, you had Thursday, Friday. We do it like this. Do, do, do. Thursday. Back test. So this is your Thursday trading window, right? Boom. So you see, Thursday was a red day, right? Then we got Friday, which was another red day, leading into Sunday. We ain't really counting Sunday, but you know what it is though, right? So we just kind of add that in. So as you see, you had boom, make these red. Then when you came down to Monday, guess what? It opened up bearish because that was the continuation from Sunday. Then by time London hit, what did it give you? The double bottom, right? And then it pumped. So when Tuesday rolled around, where's our Tuesday low? That was it right there. Oh, Tuesday did this. Nothing special. Didn't really get outside itself because majority of the move happened on Monday night, and they was just recovering, right? So this says them rebalancing price. We had a gap here because of Friday to Sunday open, right? They had the gap. That's what they was targeting. They felt that anytime you got gaps on the indices or the indexes, major indexes, they will fill those. That's what they do. Uh so you notice, right? They pull back into this range. So this is your week. This is the start of the week. Tuesday is the week range expansion, which they did was take the high. They expanded to the upside. So that they gave us a new high for the week, but no low. So that's what I mean. Like, we trading at the highs, and we clearly in a downtrend, correct? Because you parked the highs, boom. All they did was just kind of pull back. So if you want to run your fib, you're running from there to there. That makes sense. So you see, we had a 50% retracement from last week high to the new week low. What you got, Lou? So once we did that, and then that's when Wednesday roll around, you get your pump. Okay, they pumped it up, then they dumped it because now they're gonna go the other way. They said, "Hey, we've been here too long." They went barely up, swept liquidity, right? Then once they do that, it's no longer a need for them to stay there. That's when they dump price. So we get a new one. Barely, they went a little bit above the Tuesday high, put in a new high of the week because typically you get your high of the week by Wednesday. And if you would have been playing your cards right, do you need to trade anything else? You know what I'm saying? That's over 2,000 ticks that moved today from 10 o'clock to now. So technically, you could have closed that trade, got back in that trade, and boom, boom, boom. So do you really need to trade anything else?
Not if you're getting ticks like that, you don't.
That's the point. So that's the reason why I say it's better to sit on your hands, wait for an A plus setup on an A plus setup day, and then you just target that. Because most times if you look at it, and I'm gonna do the next Zoom. I'm gonna go over that, like the different time frames with different days and what you should be expecting out of a trade on what time frame. Because you seen when I went on a 3 minute chart with the volatility, your stop loss is 60 plus ticks, right? So on a 1 minute chart, your stop loss need to be anywhere between 20, 30, 40 ticks because the volatility is super high right now, right? But those same trades are only worth 30, 40, 50 ticks. Sometimes you get 100 out of them if it'll surprise you and it's take off. But those trades are smaller and you got to go on them often. and you got to have your risk management say, hey, I'm going to sacrifice a couple of winning trades. I'm going to sacrifice a couple of trades so I can at least overall pull out my winning profits. But if you wait, be a little more patient, wait for the extreme moments to happen, and then you take advantage of them, you're great. So look at it, right? The MACD crossed over. So we had a crossover right here. Let's put a vertical line at this bearish candle, the moment closed. So that's the even star pattern on the 1 hour chart. You could have waited for that and you had that close. If we go down, I use a 12 minute, I don't know, use a 15 minute. But you look at it, the MACD cross way back here. We had that little pullback right there to letting us know like everything lining up to say, hey, we dumping. But this happened outside my trade window. I take one trade a day. That's my rules, and then that's my discipline. Outside of that, I'll do one live trade. Then from there, I got to switch over to paper trade because the reason being is a lot of time people don't want to triage because they are doing then double digit trades. They got 10 plus trades going on. They don't remember what happened from what happened. For me, if I take one trade and then I can enter a paper trade and just kind of participate. But by having that one, I can go right to the trade, screenshot where I got in, where I got out, look at what could I have done better. And 9 out of 10 is like, okay, you could have managed your stop loss a little bit better. You could have been a little more relaxed, give the trade a little more time to play out, X, Y, Z. And you can learn from that and grow. But if you steady clicking that button, going in and out, in and out, in and out, in and out, you're gonna forget the trades. You're gonna forget the little details about the trades. Then it is kind of like mesh all together. You feel me? So what say not Chuck? I seen you mic light up, buddy.
This was good, Neo. Very good.
Thank you. Thank you, Sean.
Hmm.
But that's the reason why I do it. It's more peaceful. And especially trading futures, that's why we got the option market. You know, I go over to the option market. I trade on Monday, Tuesday, or whatever because the setups are different. They go off at different times, and once they hit my level or my alert, then I'm gonna take action. If they don't do neither one of those, I'm not taking action. Like, let me get back over to my other chart. I'll show you real quick, and I'll show you how McDonald's set up. And let's see, I took that one to the upside and off of gold. If y'all want to swing trade gold, you can trade GOD, GOLD. That ticker on the option market, it moves, so you can look at the gold futures and then you can start predicting your trades off of that. But what was it? So this what would happen on yesterday. I had to cut this trade. It started playing around. So Monday, boom, Tuesday hit, it flies off, right? Now I'm looking at it because they swept the high. So what I'm looking for, I seen them sweep the high. Then they start coming on down. I'm like, okay, great. On a higher time frame, this is a pullback. On a 1 hour chart, I'm gonna explain that fib in a minute. This was a pullback into this OB. Okay. Boom. So when I seen them hit that on Monday, I'm like, Tuesday, we rejecting. I was looking at it. I seen this what happened on Monday, close. Now, if I would have took the aggressive entry and got in Monday, I would have been smooth about it, right? But I wind up strolling over. I kind of forgot about it, and I kind of went over there on Tuesday because I was on YouTube with Jeff, and he was like asking about tickers after I got done trolling him about Planet Fitness. I was like, oh, McDonald's. It was on one of my watch lists, right? So when it happened, I said, okay, cool. This is my 12-minute candle. I'm gonna set my fib. I need them to pull back into this candle, and then that's gonna take my entry. So I'm in waiting. Boom, they came back for my trade, picked me up, went off. They got to the negative 27% fib. And I was looking for them to return towards the highs because I was trading with the higher time frame. So the higher time frame order flow I was looking for them to push it up and sweep the high of 227, take that liquidity, or at least get into this rejection block and then start tripping, but they quite couldn't do it. By the end of the day, the trade wasn't going which way I wanted, so I cut it and went on to call it, call it a day. But you see, they back down into this block. I think they're gonna break down and shift toward the bear side of things now because they failed to sort of meet the new high and they really started to shift bearish to me. But yeah, this is setups like this. I wait for this. Wait for that. Boom. Play an IV flush here and there. Boom. Uh, took USO today because of CL, so I wanted to swing trade that a little bit. But yeah, typically I sit on my hands for futures because the commission fees will wear you out. I go to other markets because we know how to trade multiple markets, options, credit spreads. We can even do forex we like, but futures, since you're trading with prop firms, you want to limit the amount of fees that you collect because then you're only working for the broker at that moment, right? And if you can wait for those A plus setups, you guarantee to have a very wonderful, easy day. Everything between that, it may be chopped. So Monday can be a good day for a trend. Tuesday can be a range expansion, or I can do that range expansion a little. You can do a choppy, right? It can be a choppy move back to where you looking for it to go, or it can be a smooth move. So let's go back to the NQ, right? And let's look at it. So when it went up, you see these pullbacks. You didn't really have a clean move. And then Tuesday, this is what it did Tuesday. So this telling me this is straight choppiness, right? You got a little bit of push, but with those deep wicks, that mean it was going down and up. So real quick, I'll just show you. Okay. Okay, we want a little bit pre-New York. Then let's go down to a 3-minute chart real quick. So this is our Tuesday, but you see these wicks? This is a very choppy moment, right? Very choppy. Very choppy, right? You can't get a clean move on this. You need a nice smooth move. Not I want to see candles like this, pull back, and then another roll of straight dumping candles. I like smooth. This is very nerve wracking right here because it's showing you a lot, then taking it away, showing you a lot, taking it away, showing you a lot. You see what I'm talking about? So this is, it's cool if you playing it correctly, right? Let's say you got 34, you say, well, as long as above the 34, I'm staying long. It's closing smoothly. I can take that, whatever you want to do. Or you following your price action. They came back into this little fair value gap volume imbalance, but keyed off of that price. And you would take entries like these at the right pivot levels, right? Because you got to get the right entries. I mean, trading on a day-to-day basis, the entry matter. So you catching them at volume imbalances or fair value gaps or OBs. You can be like, okay, cool, they hit, boom, stop loss the low, let it flow. Then manage your trade accordingly. But for me, I want a no return, no look back type trades. I need just to go, be smooth, be cordial. Let's just, we all adults here. Be respectful, trade, go on about your business. I do what I need to do, right? So yeah, that's patience. Okay. I hope that answered your question.
It sure did in very much detail. Thank you.
Oh, my pleasure. But yeah, that's why, we show up on Sundays and Tuesdays. We get everything ready. So when Wednesday hit, we straight execution. You look for the other setups to be getting ready to play out because not every setup gonna play out on Wednesday. So you may have to wait till Thursday or Friday for that setup to play out. And once it do, you take action. So you just let the first week set up, or unless a setup is coming from Friday, if it's dragging over the weekend. So they say it happened Thursday, Friday, then Monday it's time to execute. So you can look for those opportunities too. But you can low key Cut the amount of days that you trade, and you will start seeing a bigger picture.
And just from what you broke down, it sounds like you're trading the New York market. You're not trading London or Asian market or anything like that. Is that
Nah,
correct? Okay.
I'm not trying to. That's too much. It's too much physical strain on your body to try to trade the London. Especially you got to get up in the morning because I know everybody have a life here. They got other things. They got work obligation, children, family, whatever may be the case, right? So you trying to get up, and then also just your physical health. If we give everything to the market, we cannot get to the gym. Like where that's why I'm about to go to mid. We can't get to the gym. We can't work out. We can't do this because that's a task to try to get up at 1 in the morning, be ready for the London, trade that to about 4 in the morning because you can probably catch a play at 4 a.m. last minute joint, then get right back up for the New York or get up for the daytime again, continue your day, and then roll into that's too much strain on the body, right? When you can just wait for one time throughout the day, pick when price is at the ultimate amount of volatility and high probability, you take that trade. If it's not there at the time that you choose that works best for you, then you just don't trade that day. You just got to be okay with it. If it happens like when you're done trading and you're going about your business, it is what it is. We just come back tomorrow, come back next week. If in the stock market you choose not to take no action, you lose no money, right? In any market, any trading market, when you take no action, you lose no money. Do you gain money? No, not in all cases unless you own dividends, but you lose no money. So you don't lose your space, right? But if you take unnecessary trades and unnecessary risks, you do lose money and you will go backwards versus staying even and going forward. That's the importance of sitting on your heads, right?
I like it. Thank you.
Okay. Smooth. Nope. Let me stop that.